If you stopped working in your 50s or early 60s because of illness, injury, or a health condition, and you have savings in the bank or a partner who still earns, you may have been told there is nothing for you. That what you paid in national insurance for 30 or 40 years does not count because you have money. That you are not entitled to the support the system is supposed to provide. That is wrong. And in this video, I am going to show you exactly what you are entitled to, how much it pays, and why the rule that protects you has nothing to do with how much money you have saved. The benefit is called New Style Employment and Support Allowance. It pays based on your national insurance record, not your savings, not your income, not your partner's earnings. If you paid enough national insurance in recent years, you qualify. Full stop. This channel is not affiliated with the DWP, HMRC, or any government body. Everything here is for education only and is not personal financial advice. Let me explain what New Style ESA is and who it is designed for. New Style Employment and Support Allowance is a contribution-based benefit for people who cannot work or have limited capability to work because of a health condition or disability. The key word is contribution-based. Your eligibility depends on your national insurance record, specifically what you paid or were credited with in the 2 most recent complete tax years before the year you claim. It does not depend on your income, your savings, your partner's income, or whether you own your home. Someone with £50,000 in savings qualifies for exactly the same amount as someone with nothing, provided the national insurance conditions are met. This matters enormously for people in their 50s and early 60s, because this is the group that most commonly has savings from years of work, or a partner who is still employed and who are therefore routinely told by friends, family, or even by automated benefit calculators that they do not qualify for benefit. For means-tested benefits, that may be true. But New Style ESA is not means-tested. Income-related ESA, the older means-tested version, formally ended for new claims in April 2026, when the DWP completed its managed migration of legacy claimants to universal credit. New Style ESA is the version that remains open to new claims. If you need to claim ESA now, this is the one. To qualify for New Style ESA, you need to meet 3 main conditions. First, you must be under state pension age. New Style ESA is a working age benefit. Once you reach state pension age, this route closes. If you are approaching 66 and your health is preventing you from working, making this claim now before you reach state pension age matters. Second, your health condition or disability must limit your capability to work. You will need a fit note from your doctor covering the period of incapacity, and the DWP will carry out a work capability assessment, usually after the first 13 weeks. This assessment looks at how your condition affects your ability to carry out work-related activities, not at whether you could do your specific job or jobs at a similar level. Third, you must have paid or been credited with enough national insurance contributions in the 2 most recent complete tax years before the benefit year in which you claim. For a claim made in 2026 to 2027, the DWP looks at the 2023 to 2024 and 2024 to 2025 tax years. In each of those years, you need contributions or credits on earnings equivalent to at least 50 times the lower earnings limit, which is approximately £6,150 a year. National insurance credits received while claiming universal credit, carer's allowance, statutory maternity or paternity pay, or job seeker's allowance also count toward this test. If you were not working but were receiving credits, those years may still qualify. Check your national insurance record at gov.uk/check-national-insurance-record to see what years are on your record and whether credits appear. If you are unsure whether your NI record meets the test, call the DWP's New Style ESA line on 0800 3285644 or check with Citizens Advice before applying. Now let us talk about what New Style ESA pays, because the amount depends entirely on the outcome of your work capability assessment. For the first 13 weeks, called the assessment phase, you receive the assessment rate while the DWP processes your claim and prepares your work capability assessment. In 2026 to 2027, that rate is £84.80 a week if you are age 25 or over. After the work capability assessment, you are placed in one of two groups. The first is the work-related activity group. If you are placed here, your weekly payment rises to £138.20, and you are expected to attend periodic appointments with a work coach to discuss steps you might take toward work in the future. There are conditions attached. The second is the support group. If you are placed here, it is because the DWP has assessed that your health condition or disability is severe enough that no work-related requirements are appropriate. In 2026 to 2027, the support group rate is £145.90 a week. There is no time limit on New Style ESA in the support group. You continue to receive it for as long as you qualify. If you are placed in the work-related activity group rather than the support group and you disagree with that decision, you have the right to challenge it. The first step is a mandatory reconsideration, which you request in writing within 1 month of the decision letter. If the mandatory reconsideration does not change the outcome, you can appeal to an independent first-tier tribunal. Evidence from your GP, consultant, or other health professional significantly strengthens an appeal. Many people who are initially placed in the work-related activity group are moved to the support group on appeal or reconsideration. One important time limit applies to the work-related activity group, but not to the support group. If you are in the work-related activity group, your New Style ESA is limited to 365 days. After that, the contributory elements stop, though you may be able to continue receiving support through universal credit if you are on a low income. If you are in the support group, there is no time limit. New Style ESA is taxable income. If you receive it alongside other income, such as a private or occupational pension, your total income may be taxed. If your pension or other income exceeds a certain threshold, the DWP will reduce your New Style ESA pound for income from certain private pensions above £50 a week. This does not apply to state pension, but it can apply to occupational pensions. Ask the DWP when you claim how your pension income will be treated. There is one overlap rule worth knowing. You cannot receive New Style ESA and Carer's Allowance at the same time, because both are contributory benefits, and the same overlapping benefit rule that applies to Carer's Allowance and state pension applies here. If you are a carer considering both, take advice on which gives you better value in your specific situation. Now here is the part most people miss. New Style ESA can be claimed alongside universal credit. If your household income is low enough that you qualify for universal credit, you can receive both. However, your New Style ESA payment is deducted pound for pound from your universal credit award. The practical effect is that you receive the combined amount rather than both in full separately. The advantage of claiming both is that establishing the ESA award ensures you are placed in the limited capability for work or limited capability for work-related activity group within universal credit, which can bring additional payments in that system. If you are on a low income, it is worth checking both routes simultaneously using a benefits calculator at turn 2 us.org.uk or entitled to .co.uk. New Style ESA also generates national insurance credits while you receive it. This is significant for people in their 50s and early 60s because every qualifying year protects your state pension entitlement for the years you are not working. If you have fewer than 35 qualifying years, your New Style ESA period can help fill that gap without you having to pay voluntary contributions. Let us also briefly cover what happens if your condition began before you stopped working and you were still employed. If you became ill while working, your employer is required to pay statutory sick pay for up to 28 weeks. Once your statutory sick pay period ends, you can claim New Style ESA. You cannot receive both at the same time. If your employer does not pay statutory sick pay, for example, because you are self-employed, or your earnings are below the lower earnings limit, you may be able to claim New Style ESA from the start of your incapacity. How to claim? Apply online at gov.uk/apply-new-style-ESA or by calling 0800-285-644. You will need your national insurance number, your bank details, information about your health condition, the name of your GP, and details of any income you receive, including pensions. When you apply, you will be asked to obtain a fit note from your doctor covering the period of your incapacity. The DWP will usually contact you within 14 days. The claim can be backdated by up to 3 months if you were eligible during that period. If your condition has prevented you from working for several months and you have not yet claimed, apply now rather than waiting, and ask explicitly for backdating to the earliest date you were eligible. Your action steps. Step 1. Check your national insurance record at gov.uk/check-national-insurance-record. Make sure the 2023 to 2024 and 2024 to 2025 tax years show contributions or credits. If you are unsure what you see, call HMRC on 0300 200 3500. Step 2. Get a fit note from your GP that covers the period you have been unable to work. This is the document the DWP requires, and without it, the claim cannot progress. Step 3. Apply online at gov.uk/apply-new-style-ESA or call 0800-328-5644. Ask for backdating to the date your incapacity began, up to 3 months. Step 4. When you receive your work capability assessment, engage with it carefully. Describe your condition on your worst days, not your average days or your best days. If you need support completing the assessment form, contact Citizens Advice on 0800-144-8848 or your local Job Center Plus. Step 5. If you disagree with the work capability assessment outcome, request a mandatory reconsideration within 1 month. Gather supporting evidence from your GP or consultant before doing so. If your illness or health condition has stopped you working in your 50s or early 60s, and you have been told there is nothing for you because of your savings, your partner's income, or your property, check whether New Style ESA applies to you. It is built on what you paid in, and what you paid in is there waiting. And in the next video, we are going to look at a benefit that many people in exactly this situation, people in their 50s and 60s managing a long-term condition, can also claim regardless of their age or their income. It has nothing to do with being over 66, and most people who need it have never applied.